All right, so welcome everybody to Swing Trading the Average Joe way. And what this is is not an alert service. It's not anything like that. My goal and the purpose of this class is to teach you the way I swing trade and the strategies that I use and um, how I scan, how I assess the market is specific to me. This first class is going to cover the fundamentals that I feel are the most important, but all of the basics and stuff you can get for free on the internet. All the basics of trading and all of that stuff that information is free, and that really you can't use that to actually trade. You use that as fundamental knowledge to help you understand how the market works. So when we get into looking into specific strategies and trying to assess the market and scanning stocks, all of this is going to be specific to what I do. Now, is it 100%? No, nothing is. Nothing in trading is 100%. This, ironically, this week has been, pretty bad in terms of, my main strategy. And it's all because of the overall market. And that's something that we're going to look at, toward the end. But, I do this in one class a week because I want you to really take in and go back and digest the information that you learned that one week. Because the way this is, you can't really rush it, and you can't just pile everything up, pile all this knowledge up and then go try to trade, because it can mess you up pretty bad. And then on Sundays, we have the watch list and strategy sessions where, we can further enhance what we talked about that week. All right, so the very first thing, and I think a lot of you may already know what swing trading is, but this is the way I look at it. Swing trading, I'm looking to capture gains in stocks because that's all I trade. I think messing with options early on is very dangerous. So I trade stocks, something that I understand and that I'm intimately familiar with. And I look to hold them overnight to several days. Now some people hold them several weeks. I do have an account that if there's something that I want to hold, that I want to buy and just hold on to, I'll do that. But it'll be in an account that is not really active. I'm a USAA member. They have a brokerage account. I have my retirement stuff there, and it works out real good for long-term holds. But swing trading is, you can kind of say, is day trading, slowed way down. But you're giving your stock enough time and enough room in order to capture the gains. Swing traders use technical analysis to look for stocks with short-term price momentum. We don't really get too deep into fundamentals with this type of swing trading. Now, if you're going to hold a stock several weeks or several months, then yeah, you need to dig into the financials and you need to really get into the fundamentals. But for me and what I do, the only fundamentals I really dig into will be the news. And these traders, they may use fundamental or intrinsic value of stocks in addition to analyzing, price trends and patterns. So the goal is to capture a larger price move than is possible for you to capture on an intraday basis. So it's going to be a mix of fundamental and technical analysis, but it's going to be probably 80-20. 80 technical, 20 fundamental. And we look for multi-day chart patterns. We don't look for just the previous day or that particular day. We look for multiple days, and we try to get the uptrends and we try to catch the downtrends. It involves active position management, but it utilizes longer time intervals to determine price targets and stop loss levels. Many prefer swing trading as the longer time frames, it kind of smooths out and filters out the noise. And it's a lot calmer, a lot more peaceful. Now, some people do make the mistake of monitoring their trades all day. And I know who you are because you mention them all day long. Like, this stock is at this point. This stock is at that point. Well, that's not what you're supposed to be doing with a swing trade. You're supposed to eliminate all that noise. You get in, you set your stop, and you can set an alert if it reaches a profit target. Or you can set an alert, if you have that service on your platform or on your broker, that it'll let you know when your stock is reaching a certain point. Case in point, today, I was tracking DDD. It opened with a gap, and it ran up nicely, but then it tanked. And, I wasn't watching all of that. That noise would have probably, really had me messed up. I had enough trouble with day trading today. So I just got in, I set my stop according to my strategy and just let it go. You don't need all of that excess noise. And you don't want to sit there and monitor the screen if you're going to be in a swing trade. So most traders have a personal preference toward which time frame they like to trade in. Like in day trading, swing trading, or long-term position trading. But you can substantially increase your trading profits by combining the two. By combining either day trading and swing trading, or swing trading and long-term position trading. You open yourself up to a whole new world. And especially if your goal is to eventually one day trade for a living, then you're going to have to open up this box. Somebody even sent me an email and said that Ross was swing trading. I guess everything that they do different, I get a email. But, he's got to do something. If your day trades are slow and not doing what they need to do, you need to supplement it some kind of way. So swing trading for me was a way to supplement my day trading income when the day trades were slow. When the months were slow, the summer months, and it would take 2 or 3 days for a stock to really make a good move, I could do that. Alright, so day trading and swing trading, they do share some similarities. Swing trading, like I said, can be a form of day trading. It's just it's a slower version of day trading. You got to use the same type of trade management and, the strategies, the pattern setup, the technical patterns. But you're working with wider price ranges. You have wider profit stops or profit targets, And because of that, you're going to have a wider stop. So yeah, you tend to risk more, but you can make 10 times more. Both seek to profit from relatively short or near-term price action. For us, or for me, I'm looking for 2 to 4 days to get my profit. Both use the chart patterns and technical analysis, and you can go long and short. For me, I just go to the long side. And you can look at this, the day trade and the swing trade looks the same. All we're doing is, we're using different time frames. Instead of an intraday chart, we're using a day chart, or in some cases a week chart. If you're trading, say if you're looking to be in a swing trade for a month or 3 months or whatever, then you'll probably use the week chart. But for the short time frame that I like, I'm using the day chart. Swing trading, again, can have longer holding periods. What we normally use for swing trading could be the 15-minute, 30-minute, or 60-minute, the daily and the weekly. For me, I use a daily chart. Now, when I get ready to enter, I use an intraday chart to gain my entry. Or if I get an alert and we're reaching a profit target, I'll go back to the intraday chart to look to take profit. Other than that, it's a daily chart that stays up, and that's all I'm looking at. Because if you start looking at day trade, the intraday price action on swing trades, you're going to end up taking all your profit the first day, or you may end up taking it off before it even works. So, and this is where it says traders look for more precise entry and exits. They're going to shift to the 1-minute chart and the 5-minute chart. That's what I do. I go to the 5-minute chart to get my entries and my exits when I'm taking profit. The distinguishing difference between day trading and swing trading is going to be the overnight risk. Hey, whenever you're holding something overnight, you do have the risk of something gapping up or gapping down. So, if you're day trading, and that's why we always say don't mix day and swing trading. Don't take a day trade and turn it into a swing trade, because there's no swing trade setup. You took a day trade setup, and you don't want to hold it overnight because you haven't vetted it properly. And so people that like day trading, they're uncomfortable holding overnight because it's so unpredictable. So hey guys, all of you have presenter access. So clicking on those buttons, you're gonna cut my presentation off. So that's there, and you have that ability so that you can share your screens and all that. If we're working through something, maybe on Sundays or something like that. Yes, you have access to the mic. It does take you you're gonna have to I can't even think of the word right now, but you're gonna have to optimize it first. But yeah, that's why you have options to the mic. All you do is use the raise your hand icon, and I can stop and you can ask a question. Yeah, you have full range of everything. So overnight risk, it can be as common as a gap down in the S&P 500 to, you know, so the company, you may, let's say you short something and the company doesn't like their stock going down, so they're going to start throwing out news that may spike the stock. And overnight, the stock can gap up on that news that they throw out. So you always run that risk. But to be a swing trader, you have to be okay with that. That's why when you're in a swing trade, you want to make sure that you're in a position size that you're going to be comfortable with. That you're not going to be up all night worrying about if the stock's going to gap up on you or it's going to gap down if you're long. All right, so swing trading, again, it requires less monitoring, and it needs to stay that way. So this makes it more convenient for traders that have full-time jobs or limited access to the market during the day, or if you're in Japan and the market opens at nighttime, you know, and you can't stay up past 10:30 or 11 o'clock market time. So being able to set your swing trade and set up, you know, everything will allow you to, you know, trade and not worry about having to stay up, not worry about having to monitor the charts and be in the market all the time. Swing trades may total just a few trades per week, but you know, me, I may do 1 or 2 a week, and that's all it takes. You know, when you hit a good swing trade and you maximize that potential, it only takes 1 to make your whole week. And you know, you'll see, because you're gonna have slow weeks. You're gonna have weeks like this week where the market is not conducive to your swing trade strategy. Just like sometimes the market is not conducive to your day trading strategy. It happens. So you have to have multiple strategies, or you just sit back and wait. So because I only go to the long side, there are going to be days where, or a week where I just don't take a trade. It may be 2 weeks where I don't really get a trade. But that's fine, because as soon as the market comes back, it only takes 1 or 2 trades and your month is done. Okay, there are a lot of traders that don't meet the 25K rule. You know, you're still under PDT, and you know, you're not using a broker that allows you to trade. Swing trading comes in handy. You know, it's one of those things that allows you to trade and participate in the market. So swing trading has a lot of advantages. You know, it could take advantage of larger price movements. Hang on 1 second, I got a message coming through. All right, so you know, and I see a lot of traders in the room that take these scalps, and it's very hard to make money. You know, depending on what broker you're using and how much you have to pay for commissions. You know, this is why I stay away from a lot of trades, because 10 to 30 cents, it just doesn't make sense for me. You know, if that's going to be the maximum amount. But then market conditions sometimes dictate that's what you have to do. You know, I can't remember what stock I traded today. Was it? Might have been PRGO. Yeah, it might have been PRGO, where we only hit my first target. It didn't follow through. It, and I only got a piece of the move. It gets frustrating like that. But on the same token, swing trading does the same thing. It's just that you're going to get a bigger piece of the move. Because the same thing with PLAY. On Monday it worked. Tuesday it started to fade. And, we had to turn it loose, but we got profit on it. And that's the main thing. We locked in some profit on it. The larger price swings can go both ways. The stop losses are going to be a little bit larger, but your reward is going to be a lot larger too. So to offset this, swing trades tend to hold smaller size positions. So you'll see me, and you can only go 2 to 1 anyway. So it's going to force you to trade smaller, which is good. It forces you to trade smaller, and you're able to manage that trade well. Your emotions and everything that's a part of that trade, you'll be able to manage it better. So for me, why did I get into swing trading? It's easier to manage. It's easier to learn and execute the stops. The commission costs are cheaper because you're not trading. Like today, I had 20, 21, and 22 tickets. That's twice what I normally trade. So I know I've got over $100 in commissions. So if you're swing trading, those commission costs are cut in a fourth. So a lot of times you have more time to analyze and plan your trades. You don't have to manage the trade tick by tick, and it's a lot less stressful. Really, you don't manage swing trades tick by tick, because if you do, it's not a swing trade anymore, it's a day trade. And typically you'll make more profit per trade because you're holding for the longer moves. Every time I look at my phone and I see Richland County School District 1, I used to hate to see those calls because that was my job calling me. Now, I still get that same feeling, but they're calling, because of my son. He goes to school in the same district. So I get that tense feeling in my body when I see that pop up on my phone. All right, so I just gave you kind of a real overview of how I see swing trading, and this is through my eyes. You may have taken a class, you may have read something that is more elaborate and has all of this other stuff. I'm from the school that teaches the KISS method. You keep it simple, stupid. You don't learn all of this information that you really don't need and that you'll never use, because all it is noise, and it clouds your judgment. And we have a limited amount of mental energy that we can use every day. Once we use up that mental energy, it's very difficult to recharge our batteries in the middle of the day. That's why I like to get up and take an hour and walk away and not look at the charts. And sometimes I can't do it because one reason or another, but I try to do that because I want to clear my head. I want to try to recharge my mind as quickly as possible and as much as possible, so that way I can come in back into the market and I can focus. All right, so what we're going to talk about today is the market cycles. And it's very important that you are able to understand and identify these four phases that the market goes through. And this is what you're going to want to do this week, is go through and look at charts. Just come up with some stocks. It doesn't matter. It could be from your day trade scan. It doesn't really matter. What you're going to do is look at your daily chart and see if you can pick out these cycles and just identify them on different stocks. Because as you know, all charts look different. All stocks move a little different. And you're going to need to identify these cycles on different charts. So you have to understand these four cycles if you're going to be successful in swing trading. These phases are going to tell you when you need to be long, when you need to be short, or when to just stay in cash. So once you're able to identify what phase the market is in, then you can manage your trades accordingly. And most of the time you're going to be on the right side of the trade. Okay, phase 1. That's the phase right after a prolonged downtrend. So if you're looking at this cutout, you've got this long downtrend here. And what you're going to do is, you want to start to see this price action slow down. You see these huge candles? Now, the range is about half of what the candles were in the downtrend. They're starting to tighten up. Once you get a stock to make a new high or close above, open above the previous day's close, there's a possibility that you're going to start an uptrend and you're going to go into a new phase. But the key is understanding the first phase and what you're looking for. Because you're going to see on some charts where it comes down and it tries to bounce, but then we trade sideways for a couple of days before we actually make the move. That can actually happen. But the key is being able to identify when we're in phase 1 and when we're looking to break out of the phase. And in this case, the sellers who once had the upper hand are now beginning to lose their power. They're beginning to run out because we've hit a supply zone, and this supply zone has an abundance of buyers, and it's going to start to get bought up. And this is where we're going to be waiting for the signal to jump in long, because we're going to buy. We're going to be those buyers sitting at this supply zone. Now the stock may drift sideways without a clear trend, or start to slowly pull back a little bit. So when it does that, you don't want to enter a position. You're just waiting. You're waiting until you get a sign that we're starting to break to the upside, and then you can go in. Now, is it a 100% guarantee? No. But 65, 70% of the time, once we make a high like this, we're going to continue to push up. So this is phase 1. All right, phase 2, the stock finally breaks out and we start to get an uptrend. Now, that doesn't mean we won't have any red candles in the mix, because we're going to have exhaustion days. But as long as we're continuing to make higher lows, and in this case higher highs, we can still make that run. Now here we get a little pullback, and so we could start assuming that we may be entering phase 3. Now that phase 2 may be running out and we're moving into phase 3. Now this can trade sideways for a long time too, a week or 2 weeks, 3 weeks. But at least you know that you're in phase 3 and you need to be all cash. You know, you don't need to have any money. I mean, you don't need to have any positions. You need to have money. I didn't mean to say that. But you want to make sure that you're able to identify when these phases occur and when you can identify a break to move into the next phase or a change in direction. You know, all of these things you be able to identify by working with more charts. It's about working with as many charts as possible. Phase 3, the stock begins to trade sideways again. We're at the top. You know, we're trying to figure out where the top of this move is, and are we going to start the reverse? This, unfortunately, this is where a lot of new traders get in. They actually get in at the top because they don't understand phases yet. They're just getting in. And what happens, we hit a supply zone. That's why it's good to know your the pivot points on the daily chart. That's why I like to mark them out, because all of those pivots are supply zones. That's where buyers and sellers historically have been in the past. And more than likely, they're still going to be there. And so when we hit a supply zone and the buyers and sellers come in, we get this battle. And that's where the sideways price action comes in. That's where the candles start to get tighter and the sideways price action comes in. The stock slows down again and it can potentially move sideways. So phase 4, that's the downtrend. That's the trend that we don't like to see if we're long in the stock. But the short sellers, definitely what they want to see. No, the fundamentals are good, and everybody's still thinking that this thing has another leg up. They think we're just getting a little pullback, and they hold and end up, you know, giving a lot of money back. So you want to make sure that if you're a long bias trader, you understand when phase 4 is, because you don't want to take positions when the stock is in phase 4. Because here we could have been faked into taking a position somewhere in here by accident, and it just drops right back down. You know, so we have to understand this. You know, and what happens, they'll hold it, thinking that it's going to bounce and we're going to continue higher. Because they ended up buying at the wrong phase. They don't understand these phases. They bought at the wrong point, and then bam, the market just checkmated you. There's nothing you can do. You have to come back and reset the game, put all the pieces back on the board, and go at it again. All right, these phases occur in all time frames, and they occur on every chart. You can actually look at these intraday. They're not as clean on all the charts intraday, but you can see it intraday as well. You know, whenever the stock market itself is chopping around in stage 1 or chopping around in stage 2, you want to stay in cash. But once stage 2 sets up, you want to aggressively be in cash. You know, in stage 4, you want to be focusing on short positions if you're a short seller. Now, there are professional traders that they trade based on the market cycle, these phases. Believe it or not, this is a strategy that these guys just trade on. They look for a stock. If they see it consolidating, they look for a signal that we're building up and we're moving to the upside. They get in and they stay in it until the phase breaks and they identify it going into phase 3. And then when they identify phase 4, they go short. And it's like rinse and repeat. They do it over and over and over again. And they do it on these high beta names like on Google and Amazon and Apple. You know, they do it every day, following the same pattern on the same stocks. They don't need to scan. They don't have to because they're just trading this. All right, so here's a whole breakout. This is X. And this shows you how you can identify, you know, these phases. Here we're coming down, we're slowing down. The candles are getting tighter. And then we get a pop-up. Now, you can anticipate and get in here. You know, people that are anticipating the change in the market, they can get in here and just ride the phase up until they make a lower low and get out. You know, this isn't a strategy that I trade, but you have to understand how the market moves in phases and be able to identify this so you'll know when not to get in a trade. Omar, they trade and they swing trade this. You know, but these guys have plenty of money. They're able to risk a little bit more. And for me, it's just not a viable strategy because, you know, I can't manage my money or the trade, you know, to where it makes sense to me. But you can see, and what you want to do this week, and what I would suggest you do is on all of your charts, your daily charts, see if you can just find the phase. Just cut out like 3 months or 6 months and see if you can find the phases. Because here we've got phase 1. We got up. Here's phase 2. This is where we're kind of topping out. We're starting to roll over. The downtrend is phase 4. And then here we start with phase 1 again. You know, we traded sideways a little bit. And now we're ready to push on up. But it's real, you know, it's real simple when you draw it out on your charts. All right, does anybody have any questions about the phases that I shared with you? Any questions before we move on? All right, Shack Attack. What's your question? So everything on the right of 11.7, yeah. This is phase 2 again. You know, here was phase 2, here's 3. We just kind of had a short move, or really didn't get a good phase 4 because we bounced. And this could be still called a continuation, you know, depending on how you look at it. But this is definitely, we're in phase 2 here, you know, pushing up. How to draw out what? what do you want to? Okay, phase one is when the market is slowing down. Let me. No, that's not a. All right, here's a good daily chart. Okay, if you're looking at a chart like this, it's very difficult for you to spot phases when you've got all of these moving averages and all of this stuff in the way. So what I suggest you do is go to a clean chart. Start with a clean chart, and you're able to, identify what phase a stock is potentially in. And it's not going to be clean. It's not going to be clean at all. So here we just have a series of gap downs. We had a gap down here, and then we traded sideways. We had a gap down, we traded sideways, and this stock is not really clearly making any direction. This mess is when you're not swing trading anything. You're not trading anything. Anytime a stock is consolidating, if it's consolidating on the bottom, we're in phase one. If it consolidates on the top, we're in phase two. Phase three. And this is when we need to be in cash. We don't need to be in any trade, because all we're doing is trading sideways. We're waiting for something to actually break down. And right now, this right here would still be considered phase 3. Then we gap down. We're starting a phase 4 here, and we sell off. Now we were trying to identify this as phase 1 this week, but if you lose the low and you confirm the loss of the low, then there's no phase 1. We're still in phase 4. We're still selling off. So you have to wait for the trend actually changes for you to say we're out of that phase or we're in another phase. This started phase 1, but it didn't hold. So this is not phase 1 anymore. This becomes part of phase 4 because we're still trending down. Yeah, you'll learn how how I identify pivot points. Yeah, definitely. When we get into the first strategy next week, you'll learn how to draw pivot points. Not really. Not really, because most indicators are lagging. And you'll see next week in one of the strategies that we use, we'll use the MACD, and sometimes we use that to try to help us understand, when we may be making a turn. We use the RSI to let us know if we're oversold or overbought, and when we may be getting to an area where we make a turn. But all indicators are lagging. Some lag more than others. So what you really should be looking at first is price action. What are the candles on the chart telling me? That's where you're gonna get your most clear picture. Is what's the chart telling you? What are the candles telling you? Now I bring the moving averages in when I look to make my profit targets and stuff like that. But when I'm looking to take a trade, I'm looking at what are the candles doing? What are they doing? And depending on what they're doing, that's going to determine whether I feel we're in a position to possibly take a trade. And here I thought, we could only assume that we were going to start basing here because we tested it once, twice, 3, 4 times. And we started to push up this day. This day we started low and finished high. So automatically we're going to think, okay, if this next day opens higher and starts to push, then we're trying to move out of phase 1. And we're trying to complete this move. But I'm not using any moving averages, any indicators, or anything. I'm looking at the candle formation and I'm looking at volume. That's going to tell you the story. All right. Any other questions? And it's going to take you printing out charts and writing them down, or just putting them up on the screen and just finding areas on the chart and just draw the lines. Just draw little trend lines where you feel phase 1 is, phase 2, phase 3. You want to be able to identify these. And some are going to be real hard and they're not going to be clearly defined. Those are the stocks you stay out of. Yeah, no problem. How is leverage? Well, it doesn't fit. Oh yeah, you can always send me your charts. Always. This is all part of the class. As a teacher, this is what I did when I taught school. This is no different. The leverage doesn't really affect the trades unless you over leverage yourself. Now, if you're a short trader or a speed trader, you got to be at 2 to 1. You can't be maxed out on your leverage overnight. So most brokers will not allow you to be maxed out on your leverage overnight. All right, great. All right, what's your question? Yes, this class is recorded and it does have volume. So everything is in order. All right, so while I'm waiting on the question, I'm going to just go through the rules real quick until we get the question. Always go with the trend. You want to go in the direction of the major trend. So let's take a look at the market today. This explains to you clearly why our oversold swing trades haven't worked this week. It worked Monday. The market was trending up, you see. Tuesday, we started losing it. Wednesday, here's Thursday. We're going south. Now, I would not be in a long swing trade. Okay, yeah, I tried DDD today because I thought we would possibly get a bounce. But obviously we didn't. The market tanked. So the stock tanked. And, that was it. So whenever you see the market rolling over and we're starting to make lower lows, we broke this pivot area here. I'm not taking any more trades to the long side at all. So here's phase 3. This was phase 1. You see how we kind of bounced around in here? Then once we broke out of this is phase 2. Now we hit the top and we're bouncing back and forth. We can't quite break through the top. We're in phase 3 now. Here we're in phase 4 now. We're pulling back. So we're in phase 4. We're not taking any long swing trades. At least I'm not. Alright, let's see. When we are in phase 1 and on the chart it breaks the lower day, open up higher than previous close. No, we're entering phase 2 when we start making higher highs. Whenever we start making higher highs, that's when we enter phase 2. Because if you look at this chart, oops, not wrong one. If you look at this chart, we came down here. We're in phase 1. We didn't get to phase 2 until we started making higher highs. And really, if you want to be technical, I wouldn't be happy that we're out of phase 2, until we broke this, till we broke over here. And then I would feel that we were in phase 2. That doesn't mean you can't catch this because we're starting to break out over this consolidation. But you just have to wait. You have to read the charts. I mean, you can swing ETFs, but just depends on whether you like them or not. No, I may take it. I may take a chance. If let's say we've got some solid news and a solid catalyst, then yeah, I may take the trade because the catalyst is probably going to trump the market every time, because you're always going to have stocks that are going up when the market's going down, and those are the stocks that have a strong catalyst behind it. It may be earnings, it may be a drug company that has come up with this miracle drug that passed all these tests. It can be going up and the market can be going down. The whole sector can be tanking and that stock can be going up. But in that case, you would have needed to do some more fundamental research on it. Hold on 1 second. Mingo! Alright, start getting dressed. So, but when you're first learning how to swing trade, trade with the trend. Okay, that's the rule that you need to stick to until you get really comfortable swing trading. Don't trade extremely slow markets. When the market is moving sideways, it's going to be hard to make money swing trading. Okay, swing traders make money when the markets are volatile, just like day traders. As always, there is an exception, but when you get more advanced, just like there's an exception to the trend rule, But right now, when you first learning, don't stick, stay close to home is the best way I can put it. Stay close to home. You're gonna have opportunities. Just stay close to home. You want to make sure that the spread between the bid and the ask is not out of range. Now, I don't mind getting in a swing trade with the spread 15, 20 cents, but I'm not going to get in a swing trade when it's $1 or when it's 50 cents. I'm not going to do that, because the minute you get in the trade, you're already down. And you really don't have much room to give the stock anymore. Because if I get in a trade and I'm already $500 down because I'm in 1,000 shares, that's not going to sit well. So you still want to make sure the spread is good, and if it is a little wide, you want to go in with smaller size so you can still give the trade room to work. And I say look to trade both sides of the market. Again, you don't want to do this until you're really, really comfortable swing trading. Now, the market drops 3 times faster than they rise. That's just a well-known fact, because fear is a stronger emotion than greed. So fear is what caused the market to tank. And, so eventually you're going to want to grow into being able to trade to the short side. I'm not 100% full-time into swing trading, because I can make real good money off of 1 or 2 stocks a week to the long side, and I don't have to worry about it. But when you want to go into swing trading and you want to go in full tilt, and this is going to be your 100% focus, then you want to get in the, maybe looking to trade to the short side. And you can use the same strategies. As we go through the strategies, I'll show you how you can trade to the short side, because all you do is just flip the script and you can go short with it. But for now, when you're first learning to keep your emotions and everything in check, you just want to go to the long side. Also, you want to pay attention to correlation, because if I traded, like, let's say I was trading yesterday and I was trading CAR and HTZ. If I was trading both of those stocks, it would be like me doubling my position in one, because I'm effectively trading the same thing, or I'm essentially trading the same thing, because they're moving in correlation to each other. The same way with the airlines. I used to trade all the airlines, and I would be in 2 or 3 of the airlines at the same time, and I'm like, damn, they all move the same way. Why not just pick one and trade one airline and put my money in one? I was spreading myself out. It's really bad if you're doing it swing trading. It just doesn't make sense. So you want to pay attention to correlation. These are the 4 simple rules that you want to follow. Now, obviously, when you start trading, you want to follow the parameters of the strategy. But these are real simple overall rules that you need to follow when you're starting to swing trade. Always go with the trend. Don't trade extremely slow markets. Okay? And these are going to be holiday weeks. You don't want to swing trade the week of Christmas or the week of Thanksgiving, or the week of 4th of July is not bad. The first week of summer. There's some weeks you just don't want to trade because the volatility is going to be down. So you want to be careful, with all of that. All right, so to sum up today, you got your homework. It's not something that I'm saying you have to turn in. But if you have questions and you're unsure, email me your charts. Not a problem. Email me your charts, and you can ask me if you got it right, if you got it wrong. What are you looking at wrong? Just send it to me. But you want to understand how the market moves. You want to understand how stocks move. You want to understand how the markets move. And the only way to do that is to study charts. And in swing trading, you don't have to worry so much about studying price action, because you're basing your trades and everything off of the chart that's already been printed. Whereas in day trading, you're trading the price action. In swing trading, you're trading the actual trend. So it makes it a whole lot simpler. And so this is the anatomy of my swing trade. It's just that simple. I scan, I plan, and then I execute that plan. But the key is, a big key of execution and a big key for making sure all of these things work is that you finish. And what I mean by finish is you allow the trade to work. You don't micromanage it. You let it run its course, and you let it run to the end. Because if you get in the habit of coming in cutting your trade short, you're going to kill your profit potential. And you're never going to get comfortable swing trading. So next week, we're going to learn the first strategy so that you can put it in play. Now this Sunday, I'm going to go over the scan, because we're going to scan this Sunday for our watch list. We do that every Sunday. So you're going to actually learn to scan a little bit early. And then, you'll learn how we plan. The scan, the Sunday scan session is right here. Right here in chat. Why is this freaking computer logging up? This computer updates. I've got two identical computers, and the one that I run everything on updates like 2 or 3 times a week. It's insane. Yep, it's here Sunday at 9 o'clock. Now this Sunday, I'm only going to focus on the one scan, the one that we're going to be, the strategy that we're going to cover next week. I'm only going to focus on that one scan. Yeah, those are recorded and put in the same place. I'm going to have there's going to be a new playlist for this particular group that's going through. It'll be separate from the first group. And in this playlist, we'll have the classes and the watch list bills as we go through this class. But it will be posted. Yep, I want you to look at charts. It could be the daily chart of stocks that you're day trading. It doesn't matter. All you want to do is you want to learn the you want to learn how to identify the phases. And I'm telling you, some of these charts are going to be tough. You know how we looked at the one today. It's real tough to identify these phases. But, you know, as you start looking at them and start identifying, find them on different charts, it'll become clearer to you. You just have to go through that process. All right, you're welcome. And remember, we'll be back here Sunday. You know, I'm sure you'll probably have questions. And if you have stuff you want to look at, you know, we'll have a little bit of time for that. Because I have an hour on Sunday mornings that we can go through. But you know me, I like to take things simple. You don't see me drawing a whole lot of mess on my charts. To some people, it's what they need to trade. For me, I don't really need it. You know, I've proven that you really don't need that to make money. All right, Eric, have a good one. So work on that this week. And we'll get back together on Sunday. The recordings are going to be on YouTube, but you will get a link. Once this gets uploaded tonight, all of you guys will get a link emailed to you. If you don't get it tonight, let me know tomorrow, and I'll see if there's something wrong with your email.